My name is Sean Wargo, Senior Director of Market Intelligence for AVIXA. Started my career in kind of technology market research probably about 25 years ago. Path has included places like Consumer Technology Association, where I built an industry analysis department. Spent some time doing retail analytics for a company that did kind of retail services, lots of data to understand what's going on in the store. Transitioned over to AVIXA actually the week of the brand change from InfoComm to AVIXA back in 2017. As I like to say, the most monumental first week on a job ever. But it's been an exciting journey of really rebuilding, reimagining a lot of our market intelligence. Our goal, lofty goal, was to be a authoritative source for market intelligence in Pro AV. So standing up studies that help us really tell the story of what's happening in Pro AV. How big is the opportunity? Where's the growth? Where are the challenges? Really so that we can help all the various constituents, whether manufacturer, distributor, integrator, end user, how that all comes together and shapes this landscape. So it's been an exciting kind of place to jump in, especially now that things like pandemic have accelerated the importance of technology. We've really seen that take off to a new level. So fun area of study, shall we say, as a long-term kind of market intelligence, market research person. Yeah, the core ingredient of technology is innovation, right? And so we are in an industry that had already been focused on how do you creatively use technology to solve a challenge, a business need, a consumer, an audience need, etc. So in that sense, we were well positioned for when the pandemic hit, and everybody had to did change how they were doing everything. Learning from home, working from home, being entertained from home, and how to continue operating. So we as an industry were in a great place to provide technology that allowed commerce to continue. Now, the challenge is a lot of our prior activity was in person, and so when that went away or was halted and pulled back, we suffered an outsized amount of impact as an industry. What that shows up in our industry forecast, we showed that 2020 was about 17% less in global revenues for Pro AV as a whole. What carried us through is things like conference and collaboration, learning solutions, content production and streaming. So the increased desire and need to reach audiences by creating content, optimizing it, and then sending it out to audiences. So those things, those solution areas, as we call them, really bridge the gap for a lot of companies. Some were already there, and so it was just an acceleration. It may have amplified business they were already doing. Some, it was an about face. We have to go from a live events focused organization to helping with conference and collaboration or virtualization of events. And others, it was hard for them to find a sweet spot, a runway, an avenue to get in, and so it was clearly detrimental. When you talk about a 17% decline, that means there are many companies that were struggling during that time period. Now, since then, with return to in-person, people actually returning to events like our trade show and concerts, etc., that's the lifeblood of our industry. And so we've seen that surge in demand starting in 21 and now continuing to 22 to the point where we're now saying we're fairly recovered as an industry. 22 revenues are expected to exceed 2019. That was kind of our benchmark. Once we get to that point, we kind of say that we're healthy again. So the growth areas there after a massive decline is live events, it's fixed installation performance, and all the other parts of our business, digital signage, security surveillance, etc., that are coming back to life as well. So that recovery has been important. Yeah. This is a great opportunity for new technology, new company, innovation, all those sorts of things. So when you have a period where behavior has been massively changed and shifting through time, and you have a need for creative solution, that's a perfect catalyst for emergence of new company. So it's not surprising that new company would come from this. Some of it is the realities of downsizing during the period of contraction where companies had to lay off. And so that itself is the seeds that germinate new companies as talent kind of leaves and says, you know what, I've got a great idea that's flowing from things we couldn't do quickly in that big company. So it's often the little companies that are pushing the frontier. They're able to move fast, they're focused on something and kind of approaching it from a creative perspective versus big company that has existing product, existing customer that they have to continue to serve. Now, perhaps part of the goal though, even as a small company, is you create something new, you grow it, you get it to a certain point, and that's when it becomes appealing, attractive to a larger company. It's like, that's a great idea, I'm going to buy it out, I'm going to partner with you, whatever that might be. So you could say that actually I would say the opportunity to be acquired rather than the threat of being acquired is part of a motivator. It's what allows companies to think there's a payoff to this, even if we can't fully realize because of scale issues that a bigger company could bring, we can start it out. So I think it's a great time for a show like this because when you have contraction and you have newness, you have disruption, there's space for companies to kind of come up. And then yes, you go through the period of acquisition. We've certainly seen a lot of that in our industry as there was challenged businesses coming out of the pandemic who were ripe for acquisition. But I think to me that's natural, it's healthy, it's actually a sign of a strong opportunity base. And so I would view it more in that kind of a positive. Now, I tend to be glass half full than glass half empty, but that's kind of our take on it. Opportunity being realized. I would say, so there's a number of headwinds that could apply brakes to overall Pro AV opportunity. Certainly what you're talking about, you could almost group under the larger umbrella of an aspect of supply chain issue or resource scarcity. So we've talked about the difficulties in the market pretty extensively over the last couple of years of just getting product. Companies may have slowed down production in the expectation that demand would be slower, and in fact it didn't dip as much and it surged back very quickly. And so that rise in demand made a supply chain, it continued the supply chain issue. The same thing happens in the labor market. We did see, of course, massive layoff, reduction in force through the pandemic period. Lots of unemployment spiked really high, but jobs came back pretty quickly. And so we're back to where we were in 2018, 2019, talking about the same sort of thing of just a shortage of actual labor, skilled labor out there. And so you're seeing that increase in wages, you're seeing the poaching of labor, kind of hiring across, paying them more. The other thing that's been interesting is kind of a bottom-up pressure. So back in 2019, one of the things we talked about is companies were going out and hiring, say, recent graduate or unskilled labor and skilling them up to be able to fit certain demands. That's become increasingly challenging in this market where now you've got Walmart or Target or other service industry kind of raising the base rate, so going up to $15 an hour or more. That puts a pressure on this market, makes it much harder to hire in. So absolutely, I think your question was, is this headwind? Yes, it's one of the things that while 22, we expect strong growth. We see demand. We saw a much stronger demand in 21 than we even thought. So we raised our outlook on 21. The final analysis is that we were up about 12%, 11, 12% for Pro AV. We now see 22 as a little lower than we would have expected. And a lot of that is this story of it's harder to find labor to fulfill a project. It's harder to get materials, components to actually complete on time. And so now the effort is kind of managing timelines with the customer, really looking at how do we build into the model, the fact that it's going to be harder for us to get all the components and resources. Less reliance on price increase. That was kind of earlier on, passing through price increase. Now we're seeing much more of a scoping and scaling adjustment to the market. So yes, we think that this could have been a year where we see a plus 15% growth for the industry. That pulls it back more into the 11 range. The idea of shifting production has been one that's widely discussed. In fact, Peter Hansen, our economist, wrote in Q2, we have a series we call our META, Macroeconomic Trends Analysis, kind of looking at supply chain and what's contributing to it. And we talked about the major contributor is a rise in demand, the fact that there's so much more demand for our products. And so what has to happen, we think, is shifting production is a long-term response. There's network effects, the fact that you, right now in, say, a China, you've got all the raw materials, you've got all the components, and you've got finished good manufacturing, you have a very strong logistic chain to then ship the product around the world. That in its entirety is very hard to shift. You can take pieces of it, you can say, all right, we're going to take finished good production. This happened, say, for example, back, in TV manufacturing, we brought it over to Mexico, but you can't necessarily bring over all of the component manufacturing that goes with it. So you don't end up solving the broader problem of you still have to get all the products to that location for their finished good production. You can bring finished good assembly, but you are still ending up shipping all the pieces. So you're end up spending so much more getting all of your components to that final place to then produce the good and then bring it up to the market. So it's not enough to just think about shifting the finished good production. There has to be also thought of how do we build up the infrastructure, the chipset manufacturing in those areas, which is being discussed now. So I think the response that you're seeing, and Peter on our team is very good at kind of describing this, is the response of the federal government is to try to put the brakes a little bit on the economy, slow down the demand slightly, without leading into a full recession, which is the other big topic of the day, is how do we avoid falling into deep recession as we pull back on demand? How do we respond as an industry to kind of right the ship? How do we fix the problem? Some of it is certainly the economic response of raising interest rates to try to slow down, raise the cost of capital so that companies are kind of pulling back on spending, consumer pulls back on spending. That puts the brakes on a little bit, which then means that there's less pressure on the supply chain. The supply chain can adjust to a new state of demand. It's very delicate work, right? Because you do that too much and you tip into recession. Most people are saying, yes, recession is a greater risk than it was even, 3 months ago, 4 months ago. But the recession threat itself seems to be, it would be a correction, a more minor recession. Nobody wants it or looks for it necessarily, but it should be a brief and not as severe kind of impact. Some are saying maybe that's what we need to kind of get us to where the supply chain can react and actually recover. The tricky part is, like we saw with the pandemic, is the supply chain can also over-respond. It can say, we expect things to slow down, we're going to pull back again. And so you end up not solving it. So I think it's one of those organic things where the market will, even ours, kinds of adjust to new state of demand. Production can increase even where it already exists. Logistical challenges can be overcome. Efficiencies can be built into the model. Yes, some things may shift around a little bit, but I think most are saying that by sometime in 23, we're looking a lot better. In fact, 22 we think is probably the worst of it, and then already we start to see improvements in certain categories. Display is one where what I'm hearing out in the market is that there may have been even some overproduction in some areas, so supply was fairly rich, probably because consumer spending is starting to pull back a little bit. And so that market has been able to, that category has been able to recover a little bit more. So I think it's going to be a bit of an uneven landscape of recovery from supply chain challenges, though while it's still quite a real problem as you talk to those on the show floor and integrators who are trying to get it. The other aspect of this that I think is helping is distribution is further improving its own services, helping with the risk mitigation through finance options, those kinds of things. So we see the role of the distributor becoming even more important in this landscape to be able to help you source product, yes, of the things that you're looking for, maybe stand up new kinds of service and financing options, AV as a service, hardware as a service, and also alternatives. So it could be offering production on white label or substituting in a different product for that particular need. So distribution, you can imagine when you're constrained for components, that's going to be a really important player to kind of help you work through the challenge. Whereas in a healthy kind of market, where supply is rich. You may just have preferred vendor. You just go to your preferred vendor, and they have the products in stock. So I think all of these mechanisms kind of work together to help us improve the situation, even if it's kind of a long road to get there. Get to pick up on that. I think the interoperability comes through this convergence story that we're seeing too, IT and AV colliding more and more. The utilization of an IP background, a backbone, a network to be able to distribute AV, and continued improvements in the handling of the AV signal through the network. Better switches, better routing, all that sort of stuff. That improves connectivity and substitution as well, because you can have more goods, more options for things working on the network. So it's another good example of an adaptive mechanism to help some of the supply chain challenge. The question being, is more and more of AV becoming IT? I'd say that more and more AV is adopting IT specification. So you can think of connectivity to network as a feature set, a specification, a requirement of a technology. AV, at the end, we've always said, is endpoint technology. It's the translation of signal to analog, digital to analog, so that we can hear it. Since we're all, so far, still analog, we still hear, see, taste. So we need technologies that kind of translate into how we can interact with it. So that part of it is still incredibly important. What's changing is that more and more of those devices have to coexist inside of a larger data network, a larger communication network. We're doing hybrid and virtual work now, and so we're increasingly connecting to a network, an IT network. So instead of AV becoming more IT, I think it's more, AV is having to adapt more of the IT requirements and coexist nicely within that environment, so that it almost becomes a broad. What seems to be happening is IT and AV it's almost hard to keep the acronyms separate these days. What that's telling us is, yes, this is becoming such more of a technology umbrella, of which there are sub-segments that have certain requirements: data security, reliability, and then, of course, ease of use and accuracy, fidelity, quality on kind of the other end. And that creates this blending of requirement, which is opportunity at the end, right? The more that the integrator installer has to consider multiple requirements, complexity, that's greater opportunity for them to serve a client and optimize and provide value, therefore revenue and hopefully margin at the end. What's really fundamentally changed, I think, about the way in which we bring solutions to market, the AV side, is we had already been, for the last 20 years, 30 years, talking to the IT procurement, IT director, CTO, CIO, as part of selling solutions. That's changing the way in which we have to talk about technology and think more about things like data security and reliability, network impacts, that kind of stuff. So more and more as you walk the show floor, you're talking to AV professionals that are either coming from or getting trained up in kind of the rubric, the language, the requirements of IT. Yeah, clearly a blended mode. We just did a session actually this morning on this very topic of sustainability, ESG, et cetera, and its importance to the market. I do think it's becoming more important globally. I think climate change, energy challenges due to conflict, continued global conflicts, cost of resource, oil, gas, et cetera, all of that is driving this as an issue, particularly on the energy efficiency side, I would say. It is certainly very regional for the moment. What we're hearing so far is that in certain markets, certain regions, it's certainly elevated. You can imagine Europe probably is leading this because of all of their just challenges with energy and sourcing of power. So it's coming up more and more. I think what we were talking about this morning, Florian Rothberg of Invitis Consulting out of Germany, he has a lot of great research on this, showing in digital signage in particular, it's simple things that actually can make a big difference. And so while one might focus on, say, technology specification, building in the old green leaf that used to be on product, That's important, yes. How do we make our products more efficient? But even just in utilization itself, there's a tremendous amount that could be gained. So, for example, dark hours for digital signage, turning off displays can save a tremendous amount of energy. So, coming up with some user requirements and user guidelines for end customer can make a very big difference. Even as we also tackle the much harder issues of things like reverse logistics, reuse, recycling. Those are bigger challenges because engineering is involved. It's how are we making the product to make it easier to either recycle, reuse, dispose, all those kinds of things. So I think it's a it's a combination of efforts to try to solve, but we are seeing this elevating more and more within AVIXA and our membership as a topic of discussion to try to address it. Now, ESG is it's environmental, but it's also social and governance. So the other pieces of this on the social and governance side is things like diversity, equity, inclusion, rating companies and kind of evaluating where we are on those efforts too. So another piece, as we're hearing and seeing at our own association, is the rising discussion around how do we solve for that, become ethical organizations, promoting diversity, equity, inclusion, while also thinking about sustainability. It's kind of a combined effort. Yeah, I think there is a role for an organization like an AVIXA, industry association. Probably the most important thing for us is fostering conversation around a topic to then potentially come up with guidance and standards. We have done this on the side of diversity, for example, kind of coming up with some core tenets that then the industry signs on to as a pledge. So that's a possibility, those kinds of things. It starts with, even standards work, starts with forming a group of professionals within an industry, within a discipline area, to kind of agree on what are the requirements, what are the realities, what are the considerations that need to be built. So I think our role is less kind of telling and more listening, and then kind of creating collectively something that we can then all agree on and move forward. But we absolutely agree that we have to decide the priorities as an industry. We help there by elevating them. And then we work with membership to kind of say, okay, out of this, what is it we should be doing? And so AVIXA certainly is already having lots of conversations around sustainability too. We formed task forces to put together, kind of investigate, to look at how do you score yourself as an organization onto where you are in delivering, let's say, carbon zero or even just energy efficiency. Other associations are a little bit more involved in the technical specifications around energy utilization. Energy Star requirement would be a good example. Back in my days at Consumer Technology Association, that was a program I know we were very involved with there. But yeah, I think I would broaden it to how can associations help? Well, I think it's us and others kind of taking point on ensuring that there's conversation to be had so that, yes, we can start to provide a little bit more guidance back to the market and show commitment to and step toward an ultimate goal. But it starts with collective agreement. Can't do anything unless you've got enough people kind of saying, we need to do this. We have to stay committed behind it. Clearly, we've got plenty of cliffs as a world, right, and ahead of us that offer incentive, whether global climate change, whether energy independence for certain countries, just energy sufficiency for some countries. So all of this kind of comes together it creates a pretty massive incentive, I think, to have it happen. So I think what my comment around regional differences, I think, is around that level of kind of focus and commitment. Other parts of the globe may be seeing it more as a collective focus and commitment toward the goals that are being laid out. Paris Climate Accords being kind of an example of that. So my comment about North America is that it has been a little less of a commitment in North America, in the Americas to date. But that doesn't mean there isn't, say, grassroots level effort and focus on in certain areas kind of how we can make this better. And I do think that kind of carries forward. We're certainly hearing it louder and louder among our membership as an area of focus for us. So an example of the collaborative effort that I've been talking about is we do have a set of industry volunteers who have helped us develop an energy management standard that really cuts to this issue of power requirements and utilization to overall increase the goal towards energy efficiency, carbon zero, all that sort of stuff. So it's one example of how an industry association can form a group of volunteers, lifeblood always being the volunteers, the market responding itself, to come together around a topic. Takes a long process to go through, of course, accredited standard work, but have the associations having the mechanism to help them do that and result in something the market can then take out and utilize towards the overall goal. The thing that we talk about a lot when we're kind of off camera, off hours, at the bar, walking home from the bar, is really this question of return to office. So the big debate in the industry and collectively now, as we see lots of different companies experimenting with different levels of this. Do we go back full 5 days a week? Parts of the world, 5 days a week back in the office. Others are more, nope, we're going to be completely virtual, completely remote, and just work wherever you want to and are able to, and using technology to facilitate, and then everything in the middle, 1 day, 2 day, 3 day, etc. This is a massive experiment in motion. And so it's relevant to us as an industry because corporate being our largest market, conferencing collaboration being our largest solution area, this is where we are trying to help companies figure out what is this path? Where are we going to be? And so on the extreme end that I often will ask is like, if we're all, being a little more old school myself, being somebody who enjoys being in an office to collaborate with peers, to me, the idea of full remote, everybody going remote, is massively impactful to our economies. Construction is downplayed, city centers become downplayed. That to me is a recessionary level threat, so where we have a major disruption. Now, the data doesn't support that at all. It supports the idea that we are kind of going back to office. It may be in a kind of a mixed mode, where some days in, some days not. Some days we gather for periods of time just to kind of work together. But I think it's a fun discussion. It's a fun debate because there's lots of different perspectives across generations of employees, levels of staff, that kind of talks to where we go as an industry and kind of what role we can play and what role technology will play in that, and what the office of 2030 will look like is kind of a fun area of exploration. So, yeah, that's kind of our big thing. I suppose in some ways it can be the same for a little while, but things then change, and so we're clearly in a period where it's not going to be the same. We're changing the way in which we work, and the roles of office is changing. Yeah.